focus on Bitcoin maximalists that have like the signal that understand that the entire purpose of money is to solve the problem of barter. MicroStrategy is not Michael Saylor. It's owners of the equity, and they're initially getting into Bitcoin. It's better to just buy and hold spot Bitcoin than to speculate on a lot of these different Bitcoin treasury companies. If you own zero Bitcoin, getting any exposure to Bitcoin is better than having no exposure, because once you get a little bit of exposure, then you're more inclined to read a book about it or listen to a podcast. Go focus on your craft, build things, and then save as much Bitcoin as you can.
Cool. Well, welcome to the Quarter Life Capital Podcast, where we dive into strategies to build wealth and freedoms in your 20s and 30s. Today, I am thrilled to chat with Joe Burnett. He's a thought leader at Unchained Capital and also, the mind behind the Mustard Seed newsletter. I've known Joe for several years, and I've always been impressed with his ability to, consistently see through the noise and find signal that exists in our industry. And so just really looking forward to it. Joe, thank you so much for joining us today.
Yeah, thanks, Matt. Glad to be here.
Of course. So I'd love to dig into a little bit about your background, but also first, how did you originally get into Bitcoin? What inspired you to go down the rabbit hole?
Yeah, absolutely. I first remember, I'll start this in two ways, actually. One is when I was in middle school, which was very long ago, I guess, maybe like 2010s through 2013-ish, around that time at least, I, for whatever reason, got interested in building Android apps. And one of the apps that I happened to build at the time, for whatever reason, was called Commodity Prices. And I used the Yahoo Finance API at the time to get gold, silver, copper, cattle, whatever else, and just basically displayed it within the app. And I like to think that I was very close to potentially discovering Bitcoin very early. And unfortunately, I did not discover Bitcoin when I did that, but I imagine I had to have been fairly close. So didn't discover Bitcoin then, but, I was early into basic software engineering at a young age. I was kind of interested in, for whatever reason, gold at a young age. And so kind of had this like tech, entrepreneurial spirit, libertarian type mindset, sound money type mindset, just by maybe coincidence. Fast forward to 2017, that bull market, I just remember for whatever reason scrolling on Reddit and seeing either our cryptocurrency or our Bitcoin. And at the time, Bitcoin was maybe like $1,000 when I first consciously remember hearing about it. And I was just like fascinated by what it was. I was like, what is this digital form of money? And then throughout 2017, it went from $1,000 to $2,000, $3,000 to $6,000 to $18,000 near the very end of the year. And I just remember all throughout that year, I was like, what is this weird technology that for whatever reason people are bidding to like astronomical levels at the time? And I was like, this has to be some sort of Ponzi scheme or bubble, because it doesn't make any sense. Like, it's not a real company. Like, I guess I'd grown up thinking about either gold. Like, I had the background a little bit on gold, but more generally, I was probably more focused on like the value investing type framework, where it was like buy Coca-Cola or buy IBM, hold it for decades. It goes up, 2% per year, it pays a 3% dividend. And like, that's kind of how you like invest and save for the future. And so seeing Bitcoin just go from, again, $1,000 to $18,000 in like 1 year kind of blew my mind. And with the background in technology and just kind of being open to new ideas, I happened to buy a little back then. I was obviously in college. And then all throughout 2018, after seeing the price run up so much in 2017, I was like, all right, I'm definitely initially very skeptical of what this is, but I think there has to be something of value within this space. And so all throughout 2018, I dove into the Nakamoto Institute, which was a which is still a good resource for new people, in my opinion, mainly written by Pierre Richard, Michael Goldstein, and Daniel Krauwitz. And they had, it was kind of like this weird, sketchy blog that was very minimalistic and simple, but it was very logical in laying out the case for why Bitcoin is the best form of money and why Bitcoin has outperformed almost everything over the last 10 years at that point, and why it will continue outperforming so many things going forward. And then the entire bear market, I just became obsessed basically, and the price kept going down all the way back down to $3,000 near the end of 2018 and early 2019. And then after that, I was like, this makes so much sense. Like how, yes, there's a bear market probably because it went up so much to begin with, but this just makes so much sense. And then after that, we were off to another bull market, and it was that was kind of how I got into Bitcoin.
That's fascinating. It's kind of funny because I think you really got into it at a similar time as me, but I was also into the Ethereum side and ended up, while you were sitting there, buying Bitcoin, I was buying ETH on the way down, but, you were smarter than me.
Well, so like when I initially heard about it, like again, it was Bitcoin and our cryptocurrency. So I was probably one of the people at the time that thought Bitcoin was boomer coin, or whatever you want to call it. It was too slow. It couldn't do enough transactions per second. So that was the one narrative that I fell for. I wasn't as interested, I guess, in like the smart contract type thing, like maybe Ethereum, but I was more interested in like sound money. But I thought that for whatever reason, Bitcoin couldn't scale, and so there were other like coins that their narrative at the time was, oh, we can do more transactions per second than Bitcoin, so we're better. So I fell for that narrative at first. And then throughout 2018, I realized, like, wait, the innovation here is not a new Visa network or a new payments network. The innovation is a monetary tool that has a perfectly fixed supply that nobody can change. And to do that, you have to limit the block size, enable everyone to run a Bitcoin full node to where everyone can set the rules, and no specific group or entity can change the rules on everybody. And so once that kind of clicked for me, I was like, okay, Bitcoin's the innovation. I'm not going to focus on these other things.
That I think we all go through that journey, that altcoin journey, and eventually make it back to Bitcoin. So it's awesome to hear that you went through that pretty quickly. I was curious as well, and one of the reasons I was excited to chat with you is you're obviously a big, in terms of store of value, I think Bitcoin is fantastic, and there's more and more companies these days that are looking at Bitcoin as a store of value. One of those obviously is MSTR. And I know that there's a lot of Bitcoiners that sit on, both sides of the aisle, some that are huge MSTR bulls and other ones that are thinking that, oh, this is, something's going to go wrong here. I was just curious for you, like, why do you think like MSTR is such a great opportunity for folks? And how should people maybe be thinking, like, how did you go down the rabbit hole of MSTR and MicroStrategy originally?
Yeah, absolutely. This is definitely an interesting question. I initially remember I actually kind of remember, I don't remember the exact date, but I remember the day when MicroStrategy in the summer of 2020 put out a press release that basically said that they were evaluating alternative assets as part of their corporate treasury strategy. And at the time, like, MicroStrategy was like a $500 million company, very small relative to a lot of other US companies and global companies. And I think like the Bitcoin community at the time was like really excited about it because like there were no really public companies that were buying and holding Bitcoin. So the fact that they put out a PR and said they were considering buying Bitcoin among gold and maybe the S&P 500 and maybe another asset or whatnot was like huge news. And little did we know what MicroStrategy would become and who Saylor would be, who he is today and what he is for the Bitcoin community and what he's done for MicroStrategy. As far as like my take on MicroStrategy and in regards to Bitcoin as well, one, I think, the Bitcoin treasury company phenomenon is like catching on in a really big way right now. But I think for most people, when they're initially getting into Bitcoin, it's better to just buy and hold spot Bitcoin than to speculate on a lot of these different Bitcoin treasury companies. I think there's definitely risk with MicroStrategy, right? Like Bitcoin is unique in the sense that it's an asset that you can hold without counterparty risk. It's similar to holding a gold bar in your hand. You can hold the private keys in your hand, and you can also run a full node and know that you cannot be diluted because you're enforcing the monetary policy on the entire network. And so the Bitcoin, the asset, is very unique and very special, and that's obviously what's powering the potential for MicroStrategy. And then when I think about what even is MicroStrategy, well, I think it's kind of exactly what Saylor says. Like it's a leverage play on Bitcoin. Saylor, what he does is issues convertible notes or his new preferred equity, and effectively borrows money to buy more Bitcoin. So it's like if you want to amplify your returns, whether that's up or down, depending on whatever Bitcoin does over the short term, medium term, or long term, MicroStrategy is going to amplify those up or down. And so if Bitcoin goes down a lot, well, you're probably going to go down even more if you're holding a Bitcoin treasury company like MicroStrategy. But if Bitcoin goes up a lot, then you might actually outperform Bitcoin. So that's like one angle of like how I think about MicroStrategy and Bitcoin. At the end of the day, I definitely recommend more people. You shouldn't have Bitcoin treasury companies worth more than your actual Bitcoin. That's my personal opinion, not financial advice, but that's how I think about it. And yeah, I mean, I think it's interesting. I think we're probably going to continue to see more companies copy that playbook, and continue to issue equity and buy Bitcoin, issue convertible notes and buy Bitcoin, issue preferred equity with as a form of like fixed income to other investors that and use that money to buy Bitcoin. So it's been fascinating to play out. But yeah, those are kind of my general thoughts on MicroStrategy and Bitcoin.
What you're saying is that the fixed income market is kind of coming into Bitcoin now and helping leverage for like a lot of different operating companies that are thinking about, let's get Bitcoin for a treasury operation. So we see MetaPlanet, which is I think the best performing stock in the past year. MicroStrategy, as you mentioned, is probably the leader. You also have like Mira, which is like mining Bitcoin, but they're also taking on this convertible bond. And so with this now, we're seeing that Bitcoin bond ETFs are being issued. Like I think Vivek Ramaswamy was the presidential candidate. He's coming out with Strive and launching their own like Bitcoin bond ETF. Where do you see this entire space going, I guess, in the long term? Now that fixed income, which seems like one of the biggest catalysts for growth, is kind of starting to enter the conversation.
Yeah, I mean, I think Saylor envisions it as being like the next wave of capital that will be fueling Bitcoin acquisitions, right? Buying more Bitcoin. And I've been thinking about this a little bit recently, in the sense that when Saylor issues additional equity and buys Bitcoin, I don't know if that like, and people complain about this actually, where they're like, MicroStrategy bought 50,000 Bitcoin over the last X months. Why did the price of Bitcoin not do much? There's a number of potential reasons for that, but I think one potential reason is like it's kind of like the same. It's very similar. Like if you hold a MicroStrategy share, you're basically holding a version of Bitcoin. It's an IOU. It's got a little bit of leverage on it, but it's kind of like the same thing to some extent, or it's a very similar like risk profile or volatility profile also as well. And so I think with the fixed income preferred equity, it's actually potentially tapping into a new buyer that would not even be buying Bitcoin or would not even be buying MicroStrategy stock. It's someone that may be older, may be an institutional investor, and they know exactly what their liabilities are in the future, and they just need some sort of fixed income instrument to kind of like match those liabilities, and maybe they take a little spread in the meantime. And so I think that what's exciting about the fixed income and preferred equity, and it'll be interesting to see how much Saylor really ramps up that strategy with like STRK and STRF. But I think it's like the next wave of capital that would come in and acquire Bitcoin, or the capital that would be used to buy those preferred equity and fixed income instruments would be used to buy additional Bitcoin for MicroStrategy and potentially for other Bitcoin treasury companies. So obviously, like you'll see the charts of like Jesse Myers and Saylor show like total global wealth, and obviously fixed income is something like a $300+ trillion asset class. And if if the and at the end of the day, like all of these fixed income instruments are effectively people borrowing money to maybe buy something else. And if Bitcoin's the best thing that you can buy, well, then the people that are borrowing the money to buy Bitcoin, they can pay the highest interest rate and potentially, and this, could start sucking up a lot of capital from the fixed income market, just, and obviously be used to acquire more Bitcoin.
Okay, that's great insight, Joe. And also I want to talk more about, I know on your channel, you often talked about how Bitcoin has changed the retirement timeline, potentially for young people, right? And on this pod, we primarily talk about, the financial advice, or not financial advice, but, the things that you should know, young people should know about personal finance. And I wanted to know how your thoughts about how might Bitcoin change the traditional retirement timelines, for people in their 20s, 30s, or 40s, because our parents tell us to, own real estate, own stocks. And in our lifetime, we actually see Bitcoin as an asset class coming up, which is new to so many people. So in your advice, how has Bitcoin changed the retirement timelines for people?
Yeah, I mean, I definitely think that Bitcoin has potentially accelerated the retirement timeline for many people. I also think that's very related to this is new technology, whether that's AI and robotics, is also kind of going to accelerate the timeline to retirement, and the amount of physical work that's really required to produce the everyday goods and services that we all need and use every day. For example, we at Unchained, we created this retirement calculator. Find it at unchained.com/calculator. And you can actually type in all of your inputs on how much stocks, how much wealth do you have in stocks, how much wealth do you have in bonds, real estate, Bitcoin. And then you can play with, well, what do you expect the compound annual growth rate of these asset classes to be in the future? And then you can kind of see okay, if you assume all of these inputs, what's your outcome for your projected retirement and how soon could you potentially retire? So it's kind of it's a cool little calculator that you can play around with. But yeah, I mean, if you just look at something like the power law model, which is potentially not too aggressive, not too extreme, or the Saylor's 24 Bitcoin model, those are pretty high compound annual growth rates, to where if you're saving what, a traditional financial advisor might encourage you to save as a percentage of your income every year, and you're working for the next decade or so, you might be able to retire sooner than you think, if those models happen to be correct in the future.
What should people say to their financial advisor that recommends them not buy Bitcoin?
I would say probably find a new financial advisor.
I think that's good advice. So you talked a little bit about what you guys have built at Unchained, and I know you guys have built a really nice vault product. For anyone that doesn't know, Unchained Capital has a beautiful vault product for securing your Bitcoin. But I'm sure you guys have been have also thought significantly about inheritance as well. I guess for folks that are thinking about, and I've had this conversation with, George and Soham as well around, should you just go buy, native Bitcoin versus the ETF, and what makes sense for someone who's just getting into it? I guess I'm just curious for yourself, someone who's been a Bitcoiner, but also sees the challenges with, setting up self-custody. How should someone who's just coming to Bitcoin for the first time, how should they be thinking of that? Should they, be buying a little bit of ETF and then transferring over to self-custody, or what do you think that journey should look like?
Yeah, it's a really good question. And I've definitely been thinking about this a lot, obviously working at Unchained. The way I currently view ETFs and Coinbase and other crypto companies is it's top of funnel marketing for Bitcoin. I think if you own zero Bitcoin, getting any exposure to Bitcoin is better than having no exposure, because once you get a little bit of exposure, then you're more inclined to read a book about it, or listen to a podcast, or read an article on the internet, or whatnot. And so getting any exposure, whether it's through the Bitcoin ETF, whether it's through Coinbase, River, Unchained, whoever, I think that's a good first starting point to get you starting to become interested in what even is Bitcoin. When it comes to evaluating the different custody options, it's interesting because, I've thought about this as like, I certainly would not want a large chunk of my wealth in the BlackRock Bitcoin ETF. I also personally wouldn't want a large chunk of my wealth in a single signature hardware wallet that I store at my house, because that's a potential security risk, right? Like it's a physical bare asset. And so Unchained kind of fixes this problem to where, okay, I don't want to trust BlackRock with all of my wealth and throw it in a black box, depending on whatever their relationship is with Coinbase and however the Coinbase custody black box works. Like there's a lot of trusted third parties there. But again, I also don't want full total responsibility and, have an armed guard outside my house to protect the one seed phrase that I have sitting there. So I think both of those options personally are not great. I think it's fine to have like a little bit of Bitcoin on a single signature device, and that's totally reasonable. Just like you'd have a little bit of cash in your house or a little bit of gold in your house potentially. But I think like multi-sig, which is and you mentioned Unchained Vaults, which is built on multi-sig, to where you can have key agents, you can have multiple keys, and you can protect your Bitcoin with multiple keys. Like our default model for vaults is, as an individual, you hold 2 keys and Unchained holds 1 key. And you need 2 keys to unlock your vault and send your Bitcoin away. So with that setup, since you have the 2 keys, you have total complete control over your Bitcoin as long as you don't lose one of those, or as long as you don't lose one of those keys. If you do lose one of those keys, well, unlike single sig, where your Bitcoin would be completely gone, Unchained has a key as a backup in this vault product setup. We also have like private wealth and enterprise vaults where you can have multiple key agents, whether that's Unchained or another entity or yourself. And now no specific entity or institution is a single point of failure for your Bitcoin. And that's a pretty good option as well. So I think it's the way I think about like secure Bitcoin custody is really focused on eliminating single points of failure from any institution or even yourself, right? And I think that's why Unchained vaults are exciting to me, because now if one person disappears, including yourself, like inheritance, right? Like if you have your single sig buried in your backyard or whatever you did, and you pass away, well, how are your heirs going to inherit your Bitcoin? Like if they don't know where your seed phrase is, then they're not going to be able to get to it. At the same time, you also don't want to give them complete access to your funds while you're alive, because what if for whatever reason they take it or they accidentally take a picture of it or whatnot? You don't want them being a single point of failure for your Bitcoin. So it creates like a really interesting problem. I think like Unchained Vaults does a great job of solving that.
That's really interesting, Joe. And I think it's the idea of inheritance is one that's been like talked about. Like even Michael Saylor said, I'm going to throw out my keys as soon as I die as like a gift to Bitcoin. And so I like the way kind of Unchained is structuring this. Maybe for people that aren't as aware of how Unchained's entire structured portfolio is, maybe you want to give a bit of background of what the goal is and everything along those lines too.
Oh, as far as custody or all of Unchained products and services?
I guess it's the main mission and also maybe custody.
Yeah, makes sense. I mean, yeah, I think like Unchained, like our goal is to bring collaborative custody to individuals, small businesses, institutions, public companies, governments, right? Like I think like right now custody is a black box for so many different people and entities. Like again, like Coinbase holds so much Bitcoin right now, and no one necessarily knows how Coinbase custody works. Like I'm sure they're using whatever is their multi-sig internally or MPC or some other interesting, really like top of the line technology. But at the end of the day, it's just one entity that, has flaws and is a single point of failure when it comes to securing like probably millions of Bitcoin at this point, or I'm pretty sure millions of Bitcoin at this point. And so I think introducing collaborative custody to all of those different groups is important. It's kind of how Bitcoin scales from like a store value perspective, in my opinion, because of the problems of of holding $1 billion worth of Bitcoin, in your house. Like that's extremely dangerous and not very smart to do that. And it's the same way with, you don't want another entity or another person within Coinbase controlling the $1 billion on your behalf, or $1 million or $1,000, right? Like, it doesn't really matter the amount. But yeah, I think collaborative custody is one of the key features and like the core mission of Unchained.
That's awesome. And Joe, I think personally, I'm no math. No, I'm really, bad at, I'm always scared about storing Bitcoin at my house. So whatever you said really resonated with me there. I think a lot of our audiences, including ourselves, like, we're all in our 20s, and maybe we're just new, we're just starting to purchase Bitcoin, and storing it in either a hardware wallet, or an ETF at this time. With your experience on Unchained, like, when do you think people should start thinking about using the joint custody solution, such as what you just described with Unchained?
Yeah. I would say it's whenever you reach a point to where you begin to be concerned of, will I have this Bitcoin in a decade from now? That could be, you've already upgraded to a single signature device, like you said. Did you write down the seed phrase correctly? Like, have you practiced restoring that seed phrase on a new device if you happen to lose your device, or if your device happened to be destroyed? Things like that. Like, are you sure that no one has ever seen your seed phrase? Are you sure that no one took a picture of it? And as time goes on, like, that becomes a higher potential risk that could exist. And on top of that, it's like, okay, you have your seed phrase on one single hardware wallet, one single manufacturer. Are you sure that this manufacturer has not compromised your seed phrase in any way? Like, are you sure that their firmware was perfectly sound every time you plugged it into a computer? Are you sure that your computer was fine? Like, at the end of the day, I think, like, security is kind of a never-ending rabbit hole, to where you theoretically could be perpetually paranoid forever. And I think that, it's not great to perpetually live in paranoia, but it is good to take some steps just to make sure that you've done enough that's, like, reasonably possible to ensure that your Bitcoin is overly secure and very secure. I think the best way to do that is just simply eliminating a single point of failure, whether it's a hardware wallet manufacturer, whether that's a single custodian like the ETF, or whether that's yourself on a single signature device. So I'd say it's whenever you're like, wow, like, the number has gone up a lot. My Bitcoin is worth more than I expected it to be worth, or it's what I expected it to be worth. But now it's like, okay, I don't feel comfortable signing this transaction, or, I really hope BlackRock or whoever, never loses my Bitcoin. I think at that point, you're like, okay, I need to upgrade my security. It's time to consider something like Unchained.
Yeah, I think you touched on a really important point, like, on the collaborative custody model, because I think one thing that people really don't understand about it is that, okay, you can go and set up multi-sig yourself, right? You can go set up a 2 of 3, but at the end of the day, if you die and, it's your parents or your spouse that has to go and try to get that Bitcoin, how are they going to know how to do that? Well, Unchained can actually go and guide you through that process. And so I think that's really important. But actually, it's kind of interesting. Speaking of, I guess, centralized points of failure for Bitcoin, you've got MicroStrategy with, 600,000 coins with custodians. You've got, what does Coinbase have now? 1 million Bitcoin in custody. It's kind of crazy. Are you concerned about how, I guess, centralized the custody of Bitcoin is becoming, and how that might affect, future upgrades to Bitcoin itself?
Yeah, it's an interesting question, I guess. My personal perspective is it's not ideal. It's ideally Coinbase custody would be split into 50 different key agents, all with not one of those key agents being a single point of failure within some sort of collaborative custody network. So, like, it would be cool if MicroStrategy had Coinbase as a key agent, had Unchained as a key agent, had Fidelity as a key agent, and whoever else. And then now none of those institutions were a single point of failure for their Bitcoin. as at the moment, like I don't think it's a threat to Bitcoin itself. I think it's a threat to people that hold their Bitcoin with Coinbase, right? Like if North Korea hacked Coinbase and was able to drain their cold storage for whatever reason, which I'm sure North Korea and other attackers and hackers are probably targeting Coinbase, right? Like it's the probably potentially the most valuable honeypot in the history of honeypots. Obviously, hopefully it's not easy to steal, but something that's worth, tens of billions of dollars, maybe hundreds of billions of dollars, is obviously going to be a pretty key target for all kinds of elaborate theft, whether that's external of Coinbase or even internal of Coinbase, right? Like if you have tens of billions of dollars, who's to say, certain employees couldn't get together and try to just, hey, I have this key, you have this key, like this is a lot of money. Obviously, I don't think that will happen, and I surely hope that that does not happen. But it's certainly possible, to say the least. So yeah, that's kind of how I think about the honeypot that exists within Coinbase and within other large custodians. And I think hopefully over time people will understand that they need to eliminate a single point of failure. And like historically, people have learned this via experience, whether it's Mt. Gox, BlockFi, Celsius, FTX. Like the trusted institutions within the space have ultimately failed, whether it was negligence or a hack or anything else or fraud. It doesn't really matter. If you were a holder of a Bitcoin IOU at those platforms, you either got none of your Bitcoin back or you got a fraction of your Bitcoin back. So I think it's just, I don't hope that we have another one of those events, whether it's with any custodian, although it probably is almost inevitable that another custodian will have one of those events. But I think every time we have one, people that are in the space begin to understand the importance of eliminating single points of failure when it comes to securing a significant amount of Bitcoin.
Yeah, that's a great point. Well, and most recently Bybit as well, right? North Korean hackers did actually get that Ethereum.
Yeah.
And you should point out that Bitcoin is much more secure than Ethereum in terms of the multi-sig setup. So obviously I think Coinbase, I think you're right. I think Coinbase does have a very good and secure setup that's offline, and they've put a lot of effort into that. So that's probably not a super big concern for, say, MicroStrategy, for example. I'm just curious for you, you've dug into the details of MSTR, of MicroStrategy. What do you think is actually the riskiest case for MSTR, for MicroStrategy? Is it that, hey, we have a bear market that just occurs for the next 10 years? Like what is it that would actually break that model?
Yeah, it's a really good question. A few ideas, I guess, come to mind. One would be like their custody setup, right? Like they do have a single point of failure, I believe, with Coinbase or whoever their custodian is. That's not ideal, but also potentially unlikely. And I think, obviously I have a MicroStrategy position, so I think that these risks exist, but they're minimal or low. Another risk is simply the leverage, right? Like MicroStrategy does borrow money via convertible notes, or now their preferred equity, and they buy Bitcoin with it. So like I mentioned earlier, it amplifies returns. So if Bitcoin goes through an 8-year bear market, and we're in the year 2033 and Bitcoin's at $20,000, well, yeah, I would probably suspect that MicroStrategy's failed at that point. It might have actually probably gone to zero. I don't think that that's going to happen. I think if Bitcoin is at $20,000 in 2033, it's possible that Bitcoin has failed for whatever reason, or adoption obviously slowed drastically. So that's like a concern where it's like, okay, if you have to start paying the debt back and Bitcoin is in a pretty significant bear market and you're not able to borrow more money to keep rolling the debt, then that's going to be a pretty major problem. But, Saylor obviously he uses leverage, but he uses it in a very conservative manner. Like he's targeting I think like a 20% like debt to equity ratio from the Bitcoin to the convertible notes plus preferred equity, which are another form of fixed income instrument. So he does it in like a very conservative manner. Contrasting that, it's like, you have real estate where people regularly go 5x long real estate, put 20% down and borrow the other 80%, or even more aggressively, they put 10% down or 5% down. Like that's a lot of leverage that people are using. MicroStrategy's leverage is a lot more conservative than that. Obviously, Bitcoin's a lot more volatile, and that's part of the reason why it's important to keep the leverage significantly lower. But it's interesting to compare the two like leverage ratios between a lot of like traditional finance assets and Bitcoin, despite Bitcoin having extremely superior outperformance. But obviously that outperformance has come from extreme volatility. So those are probably two main risks that I see with MicroStrategy: custody and leverage in general. Third might just be, I hope this doesn't happen. I don't think it happens, but government confiscation, right? Like, and throughout the history of the United States, the U.S. has confiscated gold before in the past, a form of sound money. I think Bitcoin's pretty different in the sense that back then the dollar was pegged to gold, and they needed to confiscate gold to stimulate the debt-based monetary system that was dollars based on top of gold. Right now, the dollar is not pegged to Bitcoin. So it's like they want to stimulate the economy. They can just print dollars easily. They don't need to remove the peg from gold to the dollar or Bitcoin to the dollar. So I think it's a pretty low risk, but it's a possible risk, right? I mean, if the U.S. government, for whatever reason, wanted to do such a thing and it was popular among people, there may not be much that can be done about that. It might just happen. So but again, I don't expect that to happen. Like, I'm generally an optimist, and I think like with AI and robotics, like we're probably going to create a lot of prosperity and wealth and productivity for the world. And a lot of that purchasing power is just going to go into Bitcoin, and many people will get exposure to Bitcoin, whether they buy it themselves. It'll end up in their index funds via just owning a normal 401k and not even paying attention to any of this whatsoever, when things like MicroStrategy eventually probably will get added to the S&P 500. Or if you just own like a Vanguard total market index fund, then you already kind of own some MicroStrategy. You own probably some MetaPlanet. You own all of the Bitcoin treasury companies. And then as those companies grow, you get more exposure automatically because it's all weighted by market cap. And so I'm pretty optimistic, and I don't think that those things are going to happen, but those are probably the main risks that I see to MicroStrategy.
And Joe, maybe keeping on this idea of MicroStrategy, and I guess like the verbiage that Matt was using was like the idea of being centralized. Does it scare you how much, like I guess like how strong the tailwinds are for MicroStrategy and how well they can end up growing too? I guess the idea is like this week they have earnings, right? And they'll finally be able to put market to market for their Bitcoin, which, like you mentioned, the S&P 500 is a realistic idea for them to kind of join into. And so much additional tailwinds that they have just being the first market movers in this space. What do you see in the next, I guess, 5 to 10 years of the MicroStrategy if they are able to continue with this sort of growth?
What was the last part? If they were able,
if they're able to continue this kind of growth, and then like in comparison to like other competitors that might also want to have Bitcoin treasury.
Yeah, this one's an interesting one because I don't know exactly how it plays out. I was listening to Saylor on the Block podcast, whatever podcast that's called, and he had the idea that there was like a public question that the interviewer asked Saylor, and Saylor basically said, whenever MicroStrategy gets to, or if MicroStrategy gets to 5% of the total supply of Bitcoin, which would be a little over 1 million Bitcoin, and for reference today, they have a little over 500,000 Bitcoin. So we're talking about doubling the amount of Bitcoin that they have on their balance sheet. He suspected that Bitcoin would be $1 million by that point. And then he brought up, okay, if MicroStrategy somehow is able to acquire 7.5% of all Bitcoin, which would be like 1.5 million Bitcoin, then he suspected Bitcoin would be $10 million. And then he gave out another number, which was 10% of all Bitcoin, so 2.1 million Bitcoin, he suspected Bitcoin would be $50 million. And so I based on that answer, I was kind of getting the sense to him that at a certain point, the supply just gets so tight and potentially MicroStrategy gets so large that any significant incremental buys or any significant generation in BTC yield would just lead to like some sort of like massive supply squeeze that would push the price drastically higher. And it kind of makes sense because like, okay, if Saylor is going to acquire a million more Bitcoin, granted he only has 500,000 at this point, it's like, okay, for that to happen, he's got to issue a lot of fixed income, a lot of preferred equity. It's going to be new cash that's coming in, billions and billions of dollars. It's going to be buying this, fixed asset. Obviously the price is probably going to squeeze significantly higher if that happens. So I feel like at some point he probably like runs into a wall of he almost himself drives a parabolic bull market, and he can't accumulate too much because if he accumulates so much, the price runs away from him, and the next time he tries to raise $21 billion via whatever instrument that he's issuing, that buys significantly less Bitcoin than maybe the last $21 billion does. So it's an interesting question. It'll be interesting to see like if his estimates play out or his quick, top of the head estimates of like at a million Bitcoin, what's the price of Bitcoin worth actually plays out. But at the moment, I'm personally not concerned with the size and magnitude that MicroStrategy holds. And again, like I think it kind of relates to what I said earlier, is like MicroStrategy is not Michael Saylor. It's owners of the equity. It's almost similar to like Coinbase, where it's like Coinbase has a lot of Bitcoin, but it's not like Brian Armstrong holds millions of Bitcoin. It's individual entities that hold IOUs that, at least with Coinbase, they could withdraw. With MicroStrategy at the moment, they can't withdraw, but they could sell and buy real Bitcoin. So it's like it's almost like another exchange to some extent, a leveraged Bitcoin exchange at this point. And so I think it's good that more people are getting exposure without kind of consciously thinking about it as MicroStrategy and other entities get added into index funds. Like I think now, millions and hopefully billions of people in the future will have Bitcoin exposure, whether they're paying attention to finance and markets or not.
Yeah, and I like that point that you're making about like more and more people getting exposure. And I feel like most likely where the exposure will come from increasingly will be through these index funds and operating companies that are now being entered into it. I guess then my next question is, one of the the best bear cases I've heard on Bitcoin in this idea that as Bitcoin becomes more and more cemented as a store of value, it becomes less incentivized to be able to like actually move your Bitcoin. Like as Michael Saylor said, I'll never sell my Bitcoin, I'll just hold on to it, right? So maybe then my question becomes, at what point does it become hard to incentivize miners and other people to secure the Bitcoin network? If like transaction fees aren't going to be able to make up for whatever the block size rewards, once those kind of start being eliminated, it will fall short on.
Yeah, this is a really good question. And I feel like the Bitcoin community has not decided how exactly this will play out over the long run. I think it was 2022. So 3 years ago, I wrote a report with Pierre Richard on this topic. And he has like an interesting, a very unique perspective on it, because I think a lot of Bitcoiners now try to say that, oh, well, transaction fees will be very high because the block space is fixed. You'll eventually want to settle your Bitcoin on chain, whether that's between individuals or banks or institutions. And like, there will be, enough transactions to where the fees will be decently high, and that'll be good enough. And I think that I think that that's probably exactly what will play out. Like at some point, there will be more demand for block space than there is block space. And that's kind of happened, right? Like, I think it took like the mempool to clear somewhat within the last like 6 months or so. It took like a very long, like years, for the mempool to finally clear once again. And I think like, fees are very low right now. Like I don't know if the mempool is cleared recently, but for the most part, like there's transactions sitting in the mempool that are waiting to get mined, and that's been the case for quite some time. Pierre had an interesting analogy though, where he thinks, and I agree with this, where he thinks it's the miners don't necessarily like secure Bitcoin like today. It's more so the future transaction fees can secure Bitcoin. And so like what I mean by that is like theoretically Bitcoin could work with just one miner operating on a laptop somewhere. In fact, like that's how Bitcoin started, right? Like there was one miner operating on a laptop. And if no one is censoring transactions or attempting double spends, then that's fine. Like the system actually works perfectly. Then the problem is, okay, well, what if someone starts censoring transactions, or what if someone starts double spending? Well, in the censoring transactions scenario, what would happen is, okay, you're trying to broadcast your transaction. The one guy on his laptop is censoring you. He's the one miner and could, 51% attack, whatever you want to call it. All of a sudden now you can't get your transaction mined. Okay, well, what do? You create a market incentive. You increase your transaction fee for other miners or other computers on the network to actually start mining, overwhelm the attacker, and then include your transaction in a block. And so that's kind of his perspective. And at the moment, I agree with that perspective, as you don't necessarily need to like have this like wall of protection beforehand. The wall of protection, you can pay for the wall of protection whenever you need it by transaction fee. There's no point of like overspending today to build this wall of protection if you don't even necessarily need it. And so that's kind of my perspective right now, is like fees could be really low, and I think that Bitcoin would still be working fine. It's if you get censored, you have to increase your transaction fee and try to encourage a bunch of honest miners to come on the network, or convince the malicious bad miner who's censoring you to say, all right, you know what, I was censoring you, but you've offered me a pretty good, fee to include your transaction. I'll just include this so I can play honestly and get more Bitcoin. So that's kind of how I'm thinking about it at the moment.
Yeah, that makes a lot of sense. Well, I feel like these questions are always the classic, if we don't have enough, transaction fees, then, oh, Bitcoin's dead because no one's using it. And then when the transaction fees are super high, oh, well, Bitcoin is dead because it's unusable, because it's too expensive to use. So we never seem to have an equilibrium ever. It always seems to be a cycle. I guess just to wrap up here, Joe, I was curious for you, like what advice would you give to your younger self, or like what information would you tell your younger self that would have helped you go down the rabbit hole of Bitcoin more easily, that would have maybe helped you from going astray, as we all do in the early days? I was just curious.
Yeah, good question. I mean, general advice I'd give my younger self is to buy more Bitcoin. But yeah, I mean, I guess like going astray or thinking about, Bitcoin and the crypto space in general, like one thing that I think it's important that I've noticed over my time in the Bitcoin space, as I'm sure you guys have as well, is like when I got into 2017, there weren't really that many good resources to learn about Bitcoin, right? Like the Bitcoin standard didn't exist until I think like 2018, 2019. Like Saifedean emailed me a PDF copy of his book, I believe, so I could read it. And so like that, that's kind of the cornerstone book of Bitcoin from like a monetary history perspective, I would say at this point. And, that didn't even exist in 2017, despite Bitcoin going almost $20,000 at the time. And so like I learned from people like Trace Mayer, Pierre Richard, Michael Goldstein. And so I would encourage people to, focus on Bitcoin maximalists that have like the signal that understand that the entire purpose of money is to solve the problem of barter, that and to do that you have to converge on one best form of money. Otherwise, if you're bartering with every good, you're trying to use everything as money. And so the purpose of money is to find one common good, and then the one common good historically has had the best monetary properties, so scarce, portable, durable, divisible, and fungible. And once you see that, you recognize, all right, Bitcoin has the best properties, world's actively converging on it. focus on that. And then honestly, like just go focus on your craft, on like how can you stack more Bitcoin. Maybe that's working in Bitcoin. Maybe that's working in traditional finance. Maybe that's working in engineering. Maybe that's doing some sort of other thing that you're passionate about that has nothing to do with Bitcoin. And I think that's totally fine. And perhaps you can actually make more money doing something outside of Bitcoin, because not everyone can work in Bitcoin. And we don't need everyone to work in Bitcoin. We need people building things also in the real world. So yeah, that would be my advice, I guess. Like, go focus on your craft, build things, and then save as much Bitcoin as you can.
I think that's really great advice. Where can people find you, Joe? Where can they follow you?
Yeah, absolutely. They can find me on Twitter or YouTube. Just search Joe Burnett Bitcoin, and you'll probably find me. Watch out for the imposters on Twitter for sure.
That's always a problem. Well, thank you so much for joining us, Joe. And for those listening, remember to subscribe and go give Joe a follow. I've known him for several years. He keeps putting out amazing content. So keep it up, Joe, and see you all next time.
Thanks, guys.